All right. What is up, traders? What's up, tycoons? Super excited for today's video. We're going to be taking a look at ICP again. Okay, this is the Internet Computer Token. And giving you guys an update. Now we're actually retesting some of our key levels. We did come down and test our demand zone here. We bounced off of that demand zone twice, and we got a very strong push upward. Now we need to be a little bit cautious because this is all a healthy retracement. All right. And if we take a look at the overall structure, we've been trading in this much larger bearish channel. Now, just because we've been in that bearish channel doesn't mean we can't break out. We've had two false breakouts here and here. All right. Those have been pretty significant. And if you're bullish on this, that's not what we want to see. I'll go over what we do want to see. Okay. But in the meantime, make sure to smash that like button and subscribe to the channel if you guys are new. All right, I do viewer requests every single week. So if you want to see your crypto or your token in the next video, all you have to do is comment down below and I'll get to it as soon as I can. Now, some of the things that I want to highlight in the last video, that are still pretty relevant right now are going to be some of the MACD and RSI signals. So pay attention to these two things right here. I'm going to break those down for you guys really simply, real quick. All right, and so you have a series of highs here, lower highs, and then lower highs right here. So clearly the relative strength index is in a downtrend. And then over here, okay, we have actually a high at this point, a high at this point, and a higher high at this point, and then an even higher high up here at this point. So it's no secret that the token was in an uptrend. Now, what do you guys see? Well, what you see is a divergence where price action is making higher highs in an uptrend, but the relative strength index is making lower highs in a downtrend. This is known as bearish divergence, and then we end up seeing a strong move to the downside afterwards. Now, shortly afterwards, we also get a MACD crossover to the downside as well. And this is known as a bearish signal when this red line crosses down below. So there's about two things leading to a possible move to the downside here. And we ended up getting a very sharp drop all the way back into this demand zone before finding some support. Okay, so what I'm going to do is break down some of the current levels, current things that I'm watching, so that way you guys are aware and can get a really good understanding of price action and why things move the way they do. Now, before we move any further, guys, okay, the content provided in this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals that appear on this YouTube channel are not registered financial advisors. Trading in stocks, bonds, commodities, and crypto is all risky and involves a significant risk of loss. So it's not suitable for all investors. All right. So be sure to read through the full disclaimer before moving forward. And we're going to go ahead and hop back into the charts. Now, the next thing that I really want to go over on here are going to be these series of yellow lines. What these are is these are the Fibonacci retracement levels. And the way you use these and the reason that you use these is because nothing moves in a straight line down and nothing moves in a straight line up. Rather, what you get would be a move down retracement continuation of the trend or a move up retracement continuation of that trend. So that's why I like to use the Fibonacci levels. And a really great example is right over here. We can see that we had a strong rally, all right, to start off the year. And then in February, we had a pullback. And look what we did. We pulled back above our 50% retracement level. And then we ended up continuing that trend and hitting our third bullish price target to the upside here of 8.181. Right. But afterwards, we had this very strong move to the downside. And remember, nothing's going to move in a straight line down or a straight line up. Right. And so I gave you guys the retracement levels, the major area of resistance. Okay. So now this is a downtrend, healthy retracement up, and we could continue the downtrend. All right. And that's what trend continuation to the downside would look like. But that's not the only scenario, okay? Not only can you use the fibs to spot trend continuation for the uptrend or the downtrend, you can also use it to spot potential reversals. So in this case, if we would have broken through these retracement levels after our move up and we would have came down, consolidated, and broke through those levels, we could have spotted a potential downside reversal. Rather, we found support and continued up higher. So we've had the strong move down, and if we come up and if we start to consolidate a little bit here and ultimately break out past our 61.8% level, which is 6.827, that's pretty much right exactly where the price is at right now. It's at 6.84. So it's a couple cents higher than that right now. But the previous daily candle, which that's the time frame that we're looking at right now, is the daily time frame. We can see here that the previous daily candle did close there, and we're testing right along that level here on the next daily candle. So, in a textbook scenario, what you would look for is a breakout retest and then push higher. Okay, but you have to keep in mind, if we zoom back out a little bit, we've been in this bearish channel that we really haven't been able to get a real breakout from. We've only gotten false breakouts to the upside. So, be cautious of that. Don't get suckered into a false breakout to the upside. All right. And then hold it all the way down, right? If you end up breaking the trend line, okay, so if you wanted to, or now again, not financial advice, not telling you guys to do this, just going over some different setups, right? So if you wanted to play the breakout, okay, you could put a stop loss below the end of the channel here, right? And then get stopped out. Okay, there's nothing wrong with getting stopped out. If you get a breakout retest, that's very textbook, and that would be indicative that we could actually push up higher and revisit our previous bullish price target here of 8.18, as well as our next bullish price target of 9.05. Now we have some work to be done to get there. All right, so if we do end up getting there, I'll be sure to make a update video and put out another update and go over, what the new major support levels are, what the new major resistance, aka bullish price targets are, and where we can go from there. But for right now, this is the 61.8% retracement level, and this is an area where a lot of people get suckered into going long. All right, and from a risk to reward standpoint, it's a lot more risky to go long here at your major retracement level, and really your last retracement level. It's better to look for a breakout retest and then push higher and show that you can actually flip this from support to, or from resistance to support, rather than just trying to go long at the first sign of it really testing that level. So that's really the main thing that I'm looking at right now. Again, if we can break out above there, we have those bullish price targets to the upside that I gave you guys. Otherwise, you do need to be cautious that this is literally all just a healthy, justified retracement after this really sharp move to the downside. All we've done is come up to the 61.8. And now, again, we don't have to continue the trend downwards. But it's just something that you want to be aware of, is that all of this move up was very justified and very healthy, and nothing too extreme. If we also look at our RSI, this dotted line right here is 70, and you can see we're well above 70 on the RSI. If we zoom out a little bit, you can see we have gone up above 70 before, but as a general rule of thumb, it's a little bit more risky to buy something when it's at overbought conditions. If we draw a line here, okay, you can see we're pretty much testing some of the previous highs on the relative strength index. And what did we do? We did end up going higher, but it was very choppy in the process, right? And lots of wicks. And then we got a strong pullback back to around where the signal, originally came that we were overbought. And ultimately, we pushed back up higher for our wave 3 target to the upside. So, just be cautious, be on the lookout if we start to form any bearish divergence, as the bearish divergence played out in a nice drop here, and it also played out in a nice drop here. Again, that bearish divergence is when the price action is going higher, but the RSI is going slightly lower, making lower highs while price action is making higher highs. It doesn't always have to play out, but it is a good indicator that you could see some type of bearish activity. So hopefully you enjoyed this video. If you guys did, smash that like button, subscribe to the channel, and I'm out.